Hey, good morning. Tuesday, February 4th. Market analysis, Stan Ehrlich. I start out with stock market indexes, usually the E-mini, and go to futures contracts and some other topics occasionally. Cycles I'm known for in the 70s and 80s, and, well, a variety of things. So the E-mini and other indexes may have either a double top formation or a possible head and shoulder top, and I'll detail that information for you in the next 5-10 minutes with the stock indexes, and then go to futures. And we got some signals that are doing very well in futures. Um, we got overbought a week ago. Specifically, January 24th is a high day, and it's yellow because the custom relative strength index got up to a high level. Now, I learned RSI from Wells Wilder himself back in the 70s and 80s. And when I reach my RSI 75 instead of 70, and it has a different number of look back days, and it's accelerated with a special code. So when mine gets to 75, it turns the RSI bar yellow and yellow those 2 days, and the price. Pardon me, I got this cough. There we go. Now, oh, okay, when it's yellow, it's a warning, just like a traffic light. And when I get yellow, I'm suspicious that I'm going to have a trend up or down reversal, which usually happens within a day or two or three or four of it turning yellow. So it's a darn good reason to behave appropriately. So 2 days after this turned yellow, very close to previous rally highs, creating a possible double top, we on Monday of last week crashed. A very large and unexpectedly large break, but came back to close around the middle of the range. Went up a little bit the next day, Tuesday next week. Wednesday went down a little bit. Thursday came back up a little bit. And Friday was significant because it rallied nicely through a resistance level and finished closing a gap, which I've just highlighted a little rectangle outlining where the gap was. So I'm going to erase that now. And that gap is closed. And it's between 2 weeks ago Friday and last Monday when it gapped down right there. Done. Said it was going to happen. Usually does. My old saying is gaps are like a black hole in space. They tend to suck the price action back into the gap, and it did it again. I probably think you've seen 1,000 of these or more in the 53 years I've been in the business. So, boom, down on Monday. A lot lower than I would have expected. But again, it recovered reasonably well yesterday, closing lower quite a bit, but only in the middle of the range, not the bottom, not below previous lows, which it broke, and came back pretty good. So what do we got today? A rally back up somewhat, and there was in some charts, index charts, a gap to close. Now, this is the E-mini. It hardly ever gaps up or down. Usually it's only over the weekend, which has happened a couple of times lately. So it came up to a slightly higher high. Now, the S&P SPY did have a gap, and it is now closed, and you'll see that in a minute. I think we're ready to start to work our way lower again. Let's look at the fine-tune 1-minute data. We hit the high. It was almost up to the high yesterday afternoon's opening. Not quite. So it was not a new high for the session, which, is not necessarily that important if it's just a minor thing, but it didn't do it. And it started to chew away at minor recent lows a few hours ago. 2.5, 3 hours ago, made a minor new low. So all of these bids basically are gone. And now as we're starting to come down, it would be easier to get down to that low, which was about 60.39. And for the E-mini, breaking that low, next step down, I think 60.31. Next step down looks like around, it's a little more difficult, 60.22 to 60.18. And if we, by chance, are able to get all the way down below yesterday's low, which would be, boy, that's going to be all the way down to 59.35. And if you look at the daily chart, oh yeah, that's right. 59.35. I forgot it was all that very low. That would be quite bearish because you're making new lows if you can get below yesterday's low and stay there, closing below. You'd be new lows for over 2 or 3 weeks on a closing basis also. That's not particularly wise to ignore. Okay, let's go back to the 1 minute and let's go to the spider. There was a small gap between Friday and this Monday. It's gone. It's been closed. It got closed. Now, this outline is for an older gap. I'm going to erase that. This was a little line that tells us the resistance. It came up, closed the gap, and got to resistance. I'm going to erase that. This little resistance line is still relevant because when it got tested, it actually made a new historic high on January 24th and then crashed the next Monday. That was a week ago, week and 2 days ago. Came back up. Finally, it took it a week to close the gap completely. Done. Made another minor new low yesterday. But in the process, another gap occurred, which is, these gaps happening so often at the moment tells me volatility is increasing. And that implies, watch out. Things can happen super fast. Okay. Higher high today than yesterday. Closed a gap today. Starting to slip a little bit. Let's look at the 1 minute chart. I got to go faster. So, I like what I see. Remember, I am looking for new lows. I am looking for a downside correction. It is not a bear market beginning. It might last a few weeks and even a month and a half or something. But I'm still just trying to justify that by having new lows and new low closes, which would mean I was right past tense. But if I don't say this in advance, then you don't know that I can see it coming. And I usually do. So I'm looking for more weakness. Let's go to the QQQ. Gap finally closed. This has the short trading hours, remember, only 6.5 hours, 6:30 to California time AM to 1 o'clock PM on each day. Regular old-fashioned trading hours, stock market hours. Now, we haven't started to break down yet. We've slipped off a little bit. We're still higher in the day fairly significantly, and not even below yesterday's high. So I'm looking for this to flip-flop down and start to get lower on the day. That means this number is going to turn red for lower. And maybe we'll even see it break the lows of the last couple of weeks. That would make me very happy. I've got outlined here the shoulder high on November 11th. Bearish engulfing ER sell signal, perfect. Broke for several days, a lot, money. Next, went all the way back up to a new high. You have to for a head and shoulder. That's the head of the formation. Got overbought. Broke sharply again. Great, but there's no signal there. And then got back up again, either side of, well, that's strange. I just had my strategy disappear. I'll have to keep going. Got overbought and then gap down. And I think this is a shoulder high. So I've marked them with this little rice paddy hat across the 3 important highs. I've got the neckline marked right there. And now I'm looking for a break of the neckline to produce a minimum downside objective of 460. But we've got to come down from where we are now at 522 to under this line, which is around 501. In order to just get the ball started, we're only halfway there once we get below 501. Next chart, short-term detail. I've still got quotes coming in. That's good. And something weird happened with that other chart. My strategy stopped by itself. So anyway, it's running here. That's good. And I hope on the other charts as well. So I think it's starting to come down. Next. NASDAQ is pretty much the same damn thing. NASDAQ futures, no gaps. Just popped up a little above yesterday's high. nothing bullish of any consequence, nothing bearish of any consequence. Although yesterday there was some bearish consequences, but it came back fairly good. So I'm not surprised about a bounce today, but I don't think it's going to rally much. I don't think it's going to last very long, and I do think it's going to get below today's low and yesterday's low fairly soon. In which case, the daily data chart on the NASDAQ futures is outlining first shoulder high, November 11th, head of the formation, December 16, and the last shoulder high, January 22, only a couple of weeks ago. Neckline, click, downside objective, click, and we're down to 18,934. Next chart, starting to come down a little bit, not enough to get overly excited about anything bearish, but if we start making new lows for the day, I'd like that a lot. Next, we have a bearish engulfing on the top of the rally on the YM just Friday. That is the correlation with a theoretical last shoulder high, but I really can't make this a head and shoulder top very, very well because I don't like the way this acted for the first shoulder. The head is okay. The last shoulder is a little too high, but not really violating any major rules. You could also call this a double top. And that would be, again, from the beginning, late November, beginning of December to last week. And if you do that, the downside objective for the double top formation is 38,291. And if you thought this was a qualifier for a head and shoulder top, your downside objective would be almost exactly the same. So it really doesn't matter too much. Next, 1 minute chart, made a high, 8:30 in the morning, California. Couldn't do it on a rally. And at just a few minutes ago, couldn't do it again. First thing to watch for is breaking below 44,531. Next thing is for it to start breaking below 44,456. And of course, other lows on the way down. Increasingly more and more profound as they are broken. Next, Russell, totally different animal. We actually got oversold yesterday. Just barely, but oversold. And that would be below 25 on my custom RSI. And it turned it yellow. It turned the price yellow. Let me show you how accurate this is. The RSI got down yesterday to 2486.86. Below 25, yes. By a lot, no. But the fact is, if it's equal to 25 or smaller to the 1,000th or even less, you're oversold. So, yellow. Bounce, okay. You're yellow, oversold. It did it today. We're still up there. We're still strong. Here's the 1 minute chart. It's showing no real major, except for three little highs at the same price, reason for it to head south. A minor area of support held on a dip a few minutes ago, literally 5 minutes ago. I need that to be broken just to begin with, and then make me a little happier to get below 2279. I really want it to close near its lows or making new lows. Next, bonds. I did adjust the stop this morning before this YouTube. Yesterday, it was a little bit faster upward moving. We had not hit this yellow line because of the strength. It was able to yank my protective sell stop, the yellow line, upward more. And if I had left the stop where it was, we did get hit today. But the overriding situation here is the fact that we held the neckline super accurately 2 days ago, very accurately. 2 days before that, just a little bit below the neckline. In fact, I should lower the line just, well, no, that's good. And a couple of days before that, just a tiny bit, a couple of ticks literally below the line. So no major damage done, like a dent in your car, not a crash. Now, you have to say on the average, 1, 2, 3, 4 out of the last 6 days, we've held the line. Where's the rally? It was yesterday. and a couple of days before that in a very small manner. We don't have any whopping big rally after the original breakout on January 27th. That's missing. Usually we do have a big rally right away. The breakout day's okay. That's new highs for a month and a very big up day on heavy volume. Textbook classic. But this last 6 days of scooting around, making new highs and not going higher, coming back down to the neckline, going up a little, coming back down, that's unusual. So I'm liking what I'm seeing so far. You realize that we have almost a new high close. We're up about 8 at the moment. If we're up, let's say at least to the high of yesterday, hopefully above, that would make me very happy. And on top of that, it would be an outside up day, bullish engulfing, not a signal, but I do like bullish engulfings. But hey, we're still long. My adjusted stop was after the fact. I would have taken a profit close to today's lows if I had left it alone, but I wanted you to see that this is flexible, although I don't particularly encourage changing your mind midstream. In this particular case, I lowered my stop just a little bit, probably 6 ticks or less, in order to keep the yellow line going. Now I'm probably not going to lower it again, ever, for this trade, because I've already lowered a little bit, so I don't want to keep, that's a bad habit. Keep the stop moving in your favor, take larger profits. I don't care about the time frame necessarily, although sometimes that's important. And then you will start to make money on the average, probably. No guarantees. I'm still in the trade. We bought this bond on the low tick exactly the day after the ER buy signal on the exact low day, January 14th. Remember, on the signal day, when it's either turning red or green, I get in for a scalp trade and an overnight trade. I also look to be a buyer within 3 days afterwards. The next day, we opened below my bid, getting into a new long immediately. And soon, you believe, you watch, it's the low of the day so far. It ended up being the low for the whole move up since the day after the signal day. That you can't get a better entry. It's the low tick on the opening on that day, January 15th, 110.30. We still have it. We're about to have, in my opinion, a new high close, but that's just good, not great. Better than going down. Next, 10-year notes are not the same. I'm having a lot of trouble with this 10-year note. We tested a breakout January 27th. Head and shoulder bottom, yes, but acting awfully weird and incorrectly in the last 6 days. We did get a close above the neckline. That's supposed to be a major upside breakout, and that was January 30th, Friday of last week, Thursday of last week. It was a minor new high and a close above the neckline. That should have been the beginning of a move up. The next day, we're back below the neckline. No, you're not supposed to do that. But yesterday, we had an outside up day. Close is still below the neckline. And today, we have another lower low by a couple of ticks than yesterday's low. And now we're back up to or slightly above the neckline, up 13. And if we can stay here or more, and I'd love to see more, especially above yesterday's high, for an official upside breakout. I think this is a false breakout. I know, I'm procrastinating. This is a tough one. I'm going to leave the head and shoulder markers in place. I didn't mean to move that. And see if we can't get this baby rolling. Next, crude. Below the support line a lot this morning, but bouncing back pretty good. At the moment, just down a little bit, 0.40. I do think it could come down some more, but we have now gotten very, very close to oversold. I would love to see it get below 25, but it hasn't, but it's close. This is a opinion call. Today could be the low day. Close to oversold, sharp, quick exhaustion and weakness, it looks like. and it came back up into the same trading range for the last week or so. I think we're about to turn up. Next, close heating oil, challenge lows, couldn't make a new low, did not get very close to oversold, but it's now starting to pop back to the highest close for about a week, except for yesterday. We're still down 0.341. I need to get it above and stay above, close above the high of yesterday in order to feel a lot more confident about this is the bottom. But I can say I think this is the bottom. Next, we've got natural gas. It came down approximately 50%, maybe 60% into that little gap area that it created from Friday's high to the low of yesterday on a very strong up day. But guess what? Yesterday's high was right smack dab on the neckline. There's the shoulder high, 1230. And there's the head, January 13. And there's the last shoulder, let's call it January 23, 24. I think those two highs are the exact same price. Then it broke the neckline on January 28 coming down. Pretty big down day, all of it below the line. And for a couple more days got lower. Yesterday, boom, touched the line in one single day. These things don't always happen very slowly or even medium speed. Sometimes the market moves extremely quickly, taking most people off balance. They don't know what to do. They get brainwashed because of the activity. They don't see it clearly, et cetera, et cetera, et cetera. Now, we are a little bit lower, not much, and we did come down to close the gap. The gap is not finished. So I am expecting that we're not going to get back up to the line again, I hope. And I certainly don't want it to get above the line or especially close above it because that usually kills the head and shoulder top, closing above the neckline. But the touch yesterday is textbook. So come down more, lower than today low, close the gap, and don't stop coming down. Keep on going, make a lower low. The minimum downside objective is 2.4. That's what I'm looking for. Next, overbought second time in 3 days in gold. Watch out, people. I think we're very close to turning down some, not necessarily a lot. The overriding situation here is the longer term picture always, or almost always, and that is a bull market with higher highs. When you make higher highs for the trend, you frequently do get overbought, but it doesn't stop the trend. It typically creates a minor correction back to some support. And I'm going to call that 2788. Oh, I guess down to 2747 and then up. But I think it's close to turning down a little. What do we got? Silver, new high. Closing maybe above all previous recent rally highs. But we are in a resistance area. And look at the RSI. It's almost 73 at this tick. The high RSI today has been 74.34, really close to 75. So if it makes another new high by just a few ticks, it's probably going to get overbought in a resistance area. One of my favorite combinations. I think we're close, but we could still see some minor new highs, maybe to the top of this resistance area and turn down. That would also be challenging a previous rally high, which was a bearish ER sell signal, and it worked like crazy. That's my opinion. Next. Yesterday, we had a platinum bearish engulfing. Closed a lot lower, near the low of the day. Today, we went down and made a significantly lower low at 989. 990, let's say, maybe a little lower. I can tell you exactly. The low of the day was 989.80. Not that important. Now we're bouncing a little bit, not unusual. Remember, after ER1 sell signals, the day it happens, and I should have moved this back again. I was investigating things. Okay, there we go. That's where it should be. I would like to get back up to 1026 because that's my ER3 new short order for today, tomorrow, the next day. If we touch that, I'll be short another position. whether I'm still short from ER1 overnight or not. And we are at the moment with that green line right there. Excuse me, a small profit on the trade at the moment. And there we just tick down. You see the line move. Exactly what it's supposed to do. All right, let's go back to high grade copper. We had a sell signal in the top of the move. That's why I've invented the Ehrlich, the ER signals strategy. It does pick high day and low days to the exact day frequently. I wished it did it 100% of the time, but that's a little tricky. So is it doing it even a certain percentage? So that made a good profitable trade. We're out, and now we're back up again above where we had gotten out of our short. Yeah, we could have made a bit more money, but leave it alone. Don't cry over spilt milk. I think it did pretty good considering. What's it going to do now? We have tremendous support. This zone around 4.06, it held many times since August. 4 or 5 notable, maybe 6 times. And we're heading up into minor new highs for approximately 2 weeks. I think there's a good chance it could go up some more. The high-grade copper is not a precious metal. Even the government thinks we should be dropping a penny, and it costs more to make a penny than it's worth, so why not? What was the name of the smallest currency before the penny? I believe it's called a mill, M-I-L-L, and it was worth, I believe, 1/10 of a cent. I don't know when it stopped being minted, and I don't know when it stopped being used, but it was a long time ago. Now, okay, copper, friendly, looking for the next resistance area to be tested. We might even break the previous high and work its way higher. So I'm modestly friendly, intermediate, longer term. Next, soybeans. Yay! We started to make another new high. And I might add, this is profound. This new high today is almost up to the high of September 30th. October, November, December, January. This is a new high for 4 months, a third of a year, not to be ignored. I hope it stays up above the previous rally high, or we could have a minor little dip again. I want it to break above the previous rally high, which was exactly 1081 and 3/4. And here we are at the moment, it's 75 and a quarter. All we need is 6 cents and a quarter, I guess, in order to do the trick. We're up 17, so it wouldn't be too much more in order to have a new high since July of last year. 6 months, not just 4. I am going to add a little more conviction to my long-term double bottom story that I have been talking about for months. There could be, it's looking a little bit more likely that this is a long-term, many-month double bottom in soybeans. If that's true, then I got to be able to justify it at soybean oil and soybean meal and maybe corn and wheat as well, grain in general, because this says we should go up to at least 1187 if this double bottom does break out. And again, we're 6 cents away from it. Big moves involved here. Next, soybean oil is rallying, but it's still a little lower on the day, down 63 cents, 0.63, I should say. I think it's the same. And got overbought yesterday, new high ground, but did not close above the previous highs. Then it had a bit of a break today, fairly decent, but it's coming back okay. I wanted to close above yesterday's high, back into resistance, then close above the high that was made on 11/11 last year, November 11th. That was a bearish engulfing at the top of the market. That's why I developed the ER signal strategy. All automated, 100%. You can make adjustments. It's not a black box. You can fiddle around a little bit if you wish. You might be able to improve on what I've got as defaults. I like what I see. Looking for higher levels. Could be very profound. Could be a very, very large, I'm going to say 9-month head and shoulder bottom. But that's the neckline. And if I'm right, The minimum upside objective in many months to come is 61.35 or higher. Next. Oh, good. Soybean meal is rallying very nicely this morning, too. New highs for about a week. Coming up near a little resistance. I need to have the resistance broken and follow through to the upside. Next. I see you've been on a half an hour already. Almost a new high for corn. Yay! The minimum the minimum upside objective on the head and shoulder bottom was already fulfilled, and it's a done deal on January 23rd. We exceeded the previous high a few days later on January 29th, and it looks like we're about to do it again. Even after a sharp break yesterday, making new lows, washing out a bunch of sell stops, at support, it's turned around. That's bullish. I like this corn. It is now heading toward 513, and I don't have any objectives anymore at the moment. There's no, that's the best I can do, 513, but it looks like it's going to be a lot more bullish than that. Let's take a look at this. Okay, yeah. What is this? 571. I like that. Let's call it 560 or higher. Wheat. Oh boy, we've already made a new high this morning and a new high since the high made November 20th. December, January, 2.5 months worth. I like what I see. Double bottom. The upside breakout won't happen until we start to get above 635. And if this double bottom does work, the minimum upside objective, and I'm now measuring from the average of the two lows, and I'm going to use that price right about there, up to the highest high, and that's not a matter of opinion. And then from that level, okay, top of resistance, 735. Next, cattle. Another new low after a brand new sell signal yesterday. ER signal turned the price action red, bearish engulfing within a few days after being overbought. Great. We're trading currently below yesterday's low, and we're a chunk lower than that a little earlier. This signal is working perfectly so far. Next, Miss Piggy. Support held. Rallying back up. I told you about that gap yesterday. Look at this, ladies and gentlemen. We closed that gap almost to the exact tick. As a matter of fact, we needed a rally up to 92.05. Today's high is 90. Wait a minute. I think I had a wrong thing. We need to rally back up to the low of 2 days ago, not the high. 89.775. Today's high is 89.85. Perfect. A little tiny bit higher than the low 2 days ago, which was the closure of the gap price. Bingo. Told you so. I hate saying that, but whatever. Now, is it going to break support or is it going to break resistance? Don't know. At least I predicted the rally today, but it could have been a few days later to close the gap. Next. Well, this is that stock I've been watching for a couple, 3 months now. We seem to be getting stuck between 94-ish and more likely than not 84-ish. And I think that might continue a little bit longer. Minor new low, couple days, 3, 4. No breakouts, test of support, could easily bottom out and rally a bit. So now I'm looking for a breakout above 94 or, and I don't think it's going to happen, a move below 80. I vote for the upside. Next, back to the E-mini. We're still near the high of the day. We came back up again and actually apparently made a minor new high. You have a great day and profitable trading to you.